Morning was nice. Have you seen the news? Some days the market just doesn't move. It seems to breathe. Little doors of possibility swing open and our instincts sprint toward the brightest one. Before we rush, take one slow breath with me. Notice the tug to chase. Notice the nudge to hesitate. Now choose clarity. Stick around for a grounded read on BTC and top alts at the end, and here's what I'm tracking this week so your trades stay clean and your nerves steady. Educational only, not financial advice. Here's what shifted and why it matters. As reported today, Crypto.com CEO is publicly betting on a Federal Reserve rate cut this month and a strong fourth quarter for digital assets. In a separate outlook, Citi sketches a 2030 trading landscape where tokenized assets, stablecoins, and generative AI reshape the rails and the workflows. And derivatives desks, according to coverage from Decrypt, see room for further BTC upside, even as September's seasonal and macro risks gather. Three threads, one undertone. Cheaper money turns on the liquidity taps. Smarter pipes change where it flows. And positioning tries to run ahead of both. When the pipes and taps change, price learns new habits. That's opportunity. If we trade the level, not the headline. Let's start with the rate cut whisper getting louder. Cointelegraph notes Crypto.com CEO Chris Marszalek expects a cut at mid-month and says cheaper borrowing and easier financial conditions could feed a stronger Q4 in crypto. He points to last year's rate cut window as a template. Policy eased, liquidity improved, and risk assets rallied into year-end. Futures markets have recently leaned in that direction too, with cut odds rising after the Fed chair's remarks at Jackson Hole, as reported. Why traders care is simple. If the Fed lowers the cost of capital, the market often breathes deeper. Risk windows open, dips get bought a little faster, and even mediocre setups briefly look pretty. The survival frame is even simpler. Policy isn't a trade, it's a backdrop. You still need a trigger on your chart. If price reclaims a clear level on rising participation into or after the decision, that's a level you can define risk against. If the cut gets sold the news, respect it, mark the shelf below, and let the retest invite you back. Cheaper money doesn't mean straight lines. It means faster feedback. Set a time stop so a good idea that goes nowhere doesn't drain your patience or your P&L. Now to the rails under the surface. Citi's forecast, as covered by Cointelegraph, imagines a 2030 market where tokenized assets live alongside traditional instruments, stablecoins power more payments and settlement, and generative AI accelerates research, execution, and risk controls. Translated to trader language, more assets settle on chains, more cash-like instruments ride always on rails, and the tools that find, filter, and route flows get sharper. Why it matters now, not just in 2030, is the migration path. Every time a real-world asset gets tokenized with sensible rules, or a large payer adopts a stablecoin corridor, or a desk deploys AI to find signals faster, the microstructure you trade shifts a little. Volume clusters move. Open and close windows matter less on some assets and more on others. Latency and liquidity become the new edge in places you didn't think to look. The survival frame here is to watch for the first practical signs: named institutions piloting tokenization with verifiable mechanics, regulated stablecoin programs handling real volume, visible productivity jumps from AI tools on desks that actually move money. When those show up, align your watch list with the reels that are being used, not the slogans that are being tweeted. If depth thickens where rails get traction, lean in, with modest size and tight invalidation. If it's press release theater, the book will tell you. Thin bids, jumpy spreads, pretty candles that don't follow through. Trade the pipes, not the posters. And then there's the hum on the derivative side. Decrypt reports that big traders see room for BTC to push higher, even as September's reputation for chop and macro event risk lingers. Seasonality warns caution. Positioning hints appetite. That tension is useful. When derivatives markets lean bullish, you'll often see funding stabilize on perps, basis tick up on futures, and option skew reflect demand for upside protection or participation. But September tends to hand out humility lessons, especially around central bank decisions, inflation prints, and quarter-end flows. Why this matters to day traders is that you can let the market show you which parent, seasonality, or positioning gets to drive. If we mark a reclaim on volume and funding stays sane, continuation is a reasonable base case. If we lose a key area on strong participation and derivatives metrics fray, seasonality tends to get its way. The survival frame is to tie your bias to the simplest conditional. If reclaim, then small and tight. If rejection, then stand aside or fade the retest with equal discipline. Either way, no heroics. Thread these together and a picture forms. Rate policy is the tap. Tokenization and stablecoins are the pipes. AI is the pump that increases pressure where the system needs it. Derivatives desks are reading the pressure gauge in real time and trying to front-run the first flow. For us, the edge is not predicting the entire plumbing diagram. It's choosing the room we stand in, the door we'll walk through, and the floorboard we trust underfoot. Now, this is what I'm watching this week. Into the Fed meeting and its aftermath, I care less about the headline and more about the reclaim. If BTC or ETH takes back a level with rising participation, volume, breadth, and honest spreads, then I'll consider entries with invalidation tucked just beneath that reclaimed zone. If we spike and immediately slip below again, I'll step away and let the range define itself. No need to be first. On the Rails story, I'm scanning for credible tokenization pilots and stablecoin programs that move real money, not slides. If a chain's throughput, fee patterns, and ecosystem depth reflect actual adoption, I'll bias my alt watch list there. If it's just noise, I'll pass. And on derivatives, I'll let funding, basis, and skew inform my timing, not my conviction. If things get giddy into macro prints, I'll trim size and raise the bar for entries. If metrics stay balanced, I'll give good levels the benefit of the doubt. A few sneaky tips I keep close when the room feels alive. I use a two-source rule before acting on any single article or viral chart. If a point matters, it can withstand verification. I trade retests, not first impulses, because the second touch is where emotion yields to information. I size by realized volatility, so my dollar risk stays constant. If the average range on my time frame doubles, my position size halves. I set time stops, so a setup that refuses to move within my window gets closed. Cash is a position, and attention is finite. And I keep platform redundancy, funds parked on a backup venue, because the platform you can't use is the platform that hurts you most. You stayed for a bold but grounded read on BTC and top alts. So here it is, with conditions attached. If the Fed does cut and price reclaims a key area on rising participation, if Citi's Rails story keeps finding tangible pilots that thicken depth where we trade, and if derivatives metrics remain steady rather than frothy, I expect BTC to respect reclaim and go behaviors, and for ETH and top L2s to print rotational bursts on clean retests. In that case, my base plan is to buy the retest of the reclaimed line, take partials into nearby liquidity pools, and let a runner work while the structure holds. If instead policy disappoints or gets sold the news, if Rails headlines outpace actual depth, or if derivatives metrics fray into the event, I'll expect chop and mean reversion, a scalper's playground, a swing chaser's trap. In that case, I'll shorten trade duration, bring targets closer, and be willing to do less until the tape offers a clear invite. Either path is tradable if risk is honest and the plan is written before the candle moves. Wait till you hear what's next. If policy turns the tap and Rails keep forming, price will change its gait before headlines congratulate it. When a level you've marked quietly unlocks, you won't need an omen. The tape will tell you. Low, certain, unmistakable. Your job is to have a line ready and the courage to do less until it's hit. If this helped turn noise into a plan, do your future self a favor and tap like so you can find it again when the feed gets loud. In the comments, name the exact level you're watching on BTC or ETH this week. Putting it in words anchors your discipline. And subscribe for survival first updates. We'll keep reading the room together, then trading the level.